And first up, the Monetary Policy Committee of the Bank of Ghana has increased its key lending rate by a significant margin. It hiked its key lending rate to commercial banks by 2.5% to 27% after meeting to review the economy last week. Now, speaking at a news conference a while ago, Governor of the Bank of Ghana, Dr. Ernest Addison, noted that looking at the current threats to inflation and growth, the decision is prudent.
That there is evidence that the policy rate increases in the past few months have helped dampen the pace of monthly price increases. Between May and August 2022, the monthly inflation number eased from a peak of 5.1% to 1.9%. However, this was reversed in September and October on account of additional shocks from upward adjustment in ex-pump petroleum prices, utility tariff adjustments, and transportation fare increases. In the event, inflation jumped in October to 40.2% and has dragged along with it core inflation, which is almost at par with headline inflation and indicating significant underlying inflation pressures and upside risks to the inflation outlook. The inflation forecast shows that inflation will likely peak in the first quarter of 2023 and settle at around 25% by the end of 2023. This forecast is conditioned on the continued maintenance of a tight monetary policy stance and the deployment of tools to contain excess liquidity in the economy. There are, however, some risks to this forecast that would have to be monitored, including additional pressures from the proposed VAT increase in the exchange rate. Continued vigilance to the evolution of these potential price pressures in the outlook will be key. The committee is of the view that the significant upside risks to the inflation outlook remain. To continue to anchor inflation expectations, the committee therefore decided to increase the policy rate by 250 basis points to 27%.
All right, to the Governor of the Central Bank, Dr. Ernest Addison, addressing the press a while ago, financial analyst Christian Tisi-John joins us with some perspective to this story. The Central Bank has been criticized, Christian, so many times for the policy rate hikes, especially as the aim is to tame inflation, and that has still not been achieved. But the Central Bank governor says it is still the prudent move.
Yeah, Daryl, thank you for having me. It's quite surprising that the Bank of Ghana continues to hike these monetary policy rates from the 24.5%. Now we'll be doing 27%. You see, there are differences to the causes of inflation, and the one that we are experiencing in Ghana is actually one that is the cost push inflation. With the cost push inflation, and as you continue to increase the monetary policy rates, what that means is that once it goes up, lending rates also goes up. Obviously, treasury bills will also go up. So it becomes quite difficult. So far as the banks also go about increasing the lending rates, cost of borrowing therefore becomes more expensive. With a businessman as a rational economic agent, definitely you also want to increase whatever cost that he's also incurring on the prices of goods and then the services. So we ultimately end up increasing the prices of goods and services, as that also contributes to the inflation. So I'm very much surprised why we keep increasing these monetary policy rates, whilst we know that the cause of the inflation in Ghana is one that is caused by the cost push inflation. So things are going to get more difficult. I know prices of goods and services are going to go higher with the imminent introduction of the VAT increment. Once Parliament approves it, definitely cost of production will also go up, and generally prices of goods and services will continue to go up.
Well, exactly the point. The concern has been that the underlying causes of inflation are not being addressed, but the central bank is also pressed to act because the inflation keeps going up, and they need to tackle that head on. So what do you do in this case? Christian, are you still there? Can you hear me, Christian? All right, looks like Christian is frozen there. We'll get back to him on that. But I want to bring in Head of Trading at Republic Securities, Patrick Edem Agama, for some reaction to this as well, how the markets are going to react to the policy rate hike. Thanks for joining us, Patrick. And so what do you think would be the reaction from the markets to this policy rate increment to 27%?
Hello, Daryl. Good afternoon. So with regards to the markets are obviously going to react. We are seeing some liquidity increase in the markets, and despite the information on the debt exchange program, and investors are asking questions on how they can really understand and be able to make investment decisions based on the uncertain time. So despite that uncertain nature, still the markets are going to react, and obviously since the lending rates and all the other rates are rising, the markets are also investors are also going to price their bids into that.
All right, I want to bring back Christian, because he's joined us again. And Christian, so the point I was making is that the concern has been that the underlying causes of inflation are not being addressed. But then again, the central bank is pressed to act. Unfortunately, we've got an issue with Christian, so we'll fix that and get right back to him. And so back to you, Patrick, on the subject of the impacts on the market. I want to also turn to the Treasury bills auction for last week and what we saw as a sign of growing investor confidence as government for the second week running met its target. What is the trigger?
Well, so we can say that because of the increased liquidity on the market and the fact that there is still not so much clarity with regards to what the debt exchange program will entail, investors are taking it really slow and safe. So they are trying to look for instruments that are very short, and the Treasury bill is an option that they have. For now, we have government officials saying that the Treasury bills will not be affected by the haircut, but we are yet to get an official statement to state that that is not going to happen. So investors are riding on those informations, and based on the available liquidity on the market, they are placing it. In the recent auction like this, you can see that there was oversubscription, about 10% oversubscription, and the 91-day cleared at 35.54. But bids as high as 36.3 were accepted. The 182-day also cleared at 36.38, and bids as high as 36.69 were accepted. For the 364-day bill, it cleared at 35.9%. But if you look at even the percentage changes in what happened last week, you can see that they are still below about 100 basis points. So it means that there is still some resistance coming, and when there is too much demand for these securities, we expect them to start hitting or picking. I'm talking of the rates here. We expect the rates to start picking and eventually start decreasing.
All right, and for how long do we see this last? I mean, this second consecutive week of meeting the targets, do you expect that to continue?
Yes, we expect it to continue with regards to the fact that there are a number of coupon payments that are coming in. Even today, we saw 3 coupon payments and a maturity in November 22 bond. This money coming into the market and not being rolled over into a bond or a long-dated instrument will definitely end up in the short-dated instrument, which is the Treasury bill. So we expect this oversubscription to come in the coming weeks.
Well, final one to the stock market, some mixed performance we expect this week. What's the update?
Well, for this week, we still expect the Trustbank Gambia to continue its trend, increasing in value. Benzo oil palm also saw some gains last week. We expect it because for the entire market now, if you look at, you see that only the Trust Bank, Gambia, Benzo Oil Palm, and Total Petroleum are seeing the bids coming. The market is heavily on the offer side for almost all the other stocks. So we can see clearly where investors' interest in, and when that continues, that should reflect in the price of the stock.
All right, Patrick Edem Agama sporting his Black Stars jersey. I see. Is it with a flag? What's your prediction for the match? Still 0-0 at this point.
We are going to beat them 2-0.
Let's see what happens. Well, Christian, I hear, is back on, and so apologies for the technical hitches there. But Christian, I was making the point about the underlying causes of inflation not being addressed, and the fact that the central bank is being pressed to act because inflation keeps going up. So what can the central bank do? It looks like this is the only option they have at this point to keep increasing the policy rate.
Yes, I think what I realize is that they are doing the wrong diagnosis, because once you get the diagnosis wrong, obviously the solutions that you are going to propound are also going to be wrong. What we are experiencing is the cost push inflation in Ghana. With a cost push, so far as you increase the monetary policy rates, that means treasury bills will go up. When treasury bills go up, lending rates also go up, and cost of borrowing therefore becomes expensive. So with a businessman being a rational economic agent, definitely you also want to push the cost that he is incurring on the products, that is the products and services that he's actually rendering to the general public. So prices will continue to go up so far as you increase the monetary policy rate. So we need to backtrack from that regime where we think we need to mop up excess cash, excess liquidity in the system to be able to tame inflation, to putting in pragmatic measures that can actually reduce the cost of production, cost of borrowing, cost of lending, and all of these things. Once it is addressed, yes, then we begin to have a proper conversation and we'll begin to target the inflation actually coming down. But with the policy rate being hiked now and over, I don't think we are going to see the end of higher inflations in Ghana any moment sooner.
Well, I heard the governor say they expect inflation to peak during the first quarter of this year, and that's a long way coming. And so my next question is, how sustainable is this, seeing the impact on the cost of credit? Loans are going to become more and more expensive.
Exactly. So we were told a couple of months ago that was actually going to peak in October, and that hasn't materialized. And now it's being pushed to first quarter next year. What that means is that the solutions that are being propounded to solve the higher inflation rates that we're experiencing in Ghana has not been working. So it is high time we look at those measures that can drive costs down. Once cost comes down, yes, then we'll be able to address the problem of higher inflation in Ghana.
All right, I'm going to leave you to watch the match. What's your prediction right now?
I'm seeing 2-1 for Ghana.
All right, we are watching. Thank you so much. Christian Tishijan, financial analyst, giving us perspective on the increase in the policy rate to 27%. Let's switch topics and talk about E-levy. Now, despite the implementation of the electronic transaction levy, total mobile money transactions in the first 10 months of 2022 grew by 12.9% year-on-year to 833.3 billion cedis, according to the latest summary of economic and financial data by the Bank of Ghana. So why is it that government cannot accrue significant revenue from the tax on electronic transfers despite the immense growth in mobile money transactions? Here to answer is Dr. Benjamin Amwa, Executive Director, Center for Economics, Finance and Inequality Studies. Good afternoon to you. Thank you for joining us. So transactions going up, but we are not getting the required revenue. What's the problem? Looks like you're muted, Doc.
Thank you. Sorry. If you look at the data that has been presented and you compare this year to last year, you will clearly see that the E-levy has had an impact on mobile money transactions. If you compare April and if you compare May this year, you can see that there was a dip and a significant dip in mobile money transactions in these 2 months before we saw a rally or a reversal in the mobile money transactions. This clearly should tell us that the public is not in for the E-levy. No wonder the behavior. Now you're talking about 12.9% increase in transactions, about 833 billion. But we are not seeing it trickle down into the E-levy revenue basket. Again, we need to go back and look at the exemptions that exist within the electronic transactions levy, and also come to terms with the fact that it is not only Momo that is considered as the only item for electronic money transfer. There are other items in there that also qualifies to be taxed in terms of the E-levy. But then the not so one-to-one matching of the revenue to the transactions is simply because the public has and is identifying ways and means of going around the E-levy, and so you see transactions being affected, but then the transactions will not necessarily move into the E-levy revenue basket because the public is also having its own way of affecting transactions without necessarily paying the E-levy.
Yeah, and I remember that your outfit did a recent research which gave hint of that, how people were trying to maneuver and avoid paying E-levy. So government has introduced or reduced rather the E-levy to 1%, taking out the threshold of 100 cedis. I know there have been calls on government to reduce the charge. Will we see any significant improvement in revenue generated following this new move to reduce it to 1%?
Absolutely. There will definitely be an increase in the revenue accruing to government. But as to whether that will make it possible for government to achieve its target is another issue altogether. Definitely reducing it from 1.5 to 1 is good news, but still it's expensive. You see, you always have to compare how much the service providers, who are the original owners of the service or product, are charging. And then look at how much the government, that is a public service provider, is charging on the product. And if you look at that difference in pricing, you clearly see that it is too expensive for the individual or the businessman to use the product. We should not forget that you can still use cash, you can still use check for payment, and you will not suffer this electronic levy. So once all these substitutes exist, and they are not in any way illegal, and you have a service that you have to pay a levy that is expensive, then definitely most people will prefer not to use the mainstream service, but to use the other substitute that exists and also exploit the loopholes. So the call is that government, if possible, still try to look at it and break it down further so that it becomes more expensive for users to try other avenues. The way it is still less expensive for individuals to switch and for individuals to avoid it. And you want to make it more expensive. And the only way you can make it more expensive is to reduce the rate so that the incentive to go around the E-levy will be reduced. Then we can see more revenue coming from the government coffers.
Right. I mean, I'm just thinking about the situation you point out that people are trying to, maneuver and avoid paying the E-levy. I just want to know what can be done to discourage that at this point.
Okay. Again, if you look at the pool of individuals or economic agents who have more incentive to go around the E-levy, it is the informal sector. And the E-levy was presented as one of the tools or strategies to get the informal sector to also contribute enormously to the revenue basket of government. Now, you see, because our informal sector is still heavily not formalized, we are having a challenge. What we need to do is to think through how best we can identify channels or points where the informal sector meets the formal sector. And if we can identify these channels or points, then we can place at these points or channels some of these levies where the informal sector will have no option than to pay. Until we get to that point where we can get these channels where the informal sector meets the formal sector, still the informal sector that drives most of our economic activities will always have a way of going around some of these initiatives. And in the end, our objective of getting them to also contribute a fair share of revenue to the state will not be achieved. And that is what exactly the E-levy is pointing to us. If we are having 833 billion of transactions, and we are applying just 1%, and if we have taken off the threshold of 100 cedis, then it should be easy to mobilize. But the question is why? The why means that most people are going around it and not saying it.
All right. Thank you so much for your perspective this afternoon. I am taking predictions on the Black Stars game, which is currently underway. I thought that by now the Black Stars would have netted some goals in, but it's 0-0 right now. What do you think is going to happen at the end of the first half?
Oh, I'm a Ghanaian, so I'll speak like a Ghanaian. I think that any win for us should be okay. Any win that gives us 3 points is what we should go in for. So that going into the game against Uruguay, we can look for another win and then get ourselves into the next round. So I will go for any win. And I think a 3-1 will be good for us.
Well, I don't know if that's asking too much, but we can't afford to lose this game. Otherwise, we may just be out of the World Cup. Thank you very much, Dr. Benjamin Amwa, who is Executive Director of Service, on the issues to do with the E-levy. So we'll stick with that topic because Dean at the University of Cape Coast Business School, Professor John Gachi, has said the reduction of the electronic transaction levy to 1% should be complemented with robust system devoid of leakages to rake in more revenue. Speaking to Joy Business at the 2022 induction ceremony of the Association of Certified Chartered Economists, he said the knee-jerk approach to the expansion of the revenue base domestically is hurting the economy, hence government should be proactive.
The event was to induct new members of the association. Professor Gachi advised the government to ensure a strict regulation on the financial system of the country while putting in place measures to further increase revenue domestically.
Well, I think the reason is to expand the revenue base, to rake in more money through the E-levy, to come to terms with the reality that the E-levy has now contributed more, because the reduction from 1.5 to 1% is occasioned by a collapse of the base. What it means is that there's no limit to transaction, and by so doing you engulf so many into the transaction space to increase the revenue. So I think it's going to increase revenue. That is the main purpose. Yeah, it's not just about the reduction, but it's about capturing more people into the E-levy space. So now when you transfer or you transact with 10 cedis, you are paying. If you are transacting with 20 cedis, you are paying. So all these things cumulatively put together at the end of the day will contribute to more tax revenue than it used to be.
Head of Operations for the association, Konedi Yadom, appealed to all chartered members to use their acquired certificates to contribute meaningfully to the economic development of various organizations, private businesses, and national development.
These are qualified members who have gone through our trainings, have gone through our exams, so they've been able to certify standards in terms of academics and let's say ethics. So they've gone through all the ethics, they have working experience, and then they've been certified as professionals in our various fields. The Association of Certified Chartered Economists, we have 7 main areas that we charter candidates in, and then all of them comes with their own job prospects. We have financial economics, we have energy economics, we have petroleum, we have industrial, economic policy analysis, and then health. So all these are specialized fields. So you can become a chartered economist, not in all the fields, but in specialized fields. And these fields comes with their own job prospects.
The chartered members, according to the association, need to consider mentorship in order to fast-track their experience and confidence building. Other than that, they should adhere to the professional code, since ethical requirements are meant to ensure that they practice professionally and objectively.
All right, a quick update on the match with South Korea. Some good news to report. Ghana is up 1 goal. Musbao, how did that happen?
Well, so Ghana, Jordan Ayew had the ball on the left side of attack, and there was a free kick for Ghana. We saw Mohamed Kudus kick it into the box. Well, it was a bit of tussle there, but finally the ball bounced onto the ground and Mohamed Salisu was first to connect to it. And that's just what happened. Ghana lead by 1-0. For a moment, there was a little review to check whether indeed there was a handball somewhere, because when the South Korean player tried to clear the ball, it came off the hand of Dede Ayew, but it just happens that his hand was pretty close to his body.
Okay.
For which reason, in football regulations, when your hand is that close to your body, then it means that it wasn't intentional for you to get the hand, against the ball. So at the moment, Ghana leads by 1-0, and Ghana has another free kick in a very similar situation, like we scored from the first.
Right.
And we wait to see if that is going to end at the back of the net. Mohamed Kudus is behind the ball this time round, and what we can report is that, well, the ball has been cleared, and there is no goal at the moment. So Ghana is leading 1-0, and it's looking good for Ghana at the moment.
Looking good for Ghana. Thank you, Musbal, for that update. We keep watching. And that's the marketplace, everyone. Thanks for watching. More news on our website, myjoyonline.com/business. We leave you.